In this video, I'm going to show you how to maximize your profits from winning trades. So if you want to be taking trades like this, and this, then stick around. Let's get into it. So this is a classic supply and demand hierarchy. We have extreme supply, midpoint, demand, and extreme demand. The way I trade, I split the price action from the high to the low of the previous day perfectly mathematically into 5. And if you don't use maths to do things like this, you're not going to get accurate backtest, okay? And what I tend to see traders do is price action high to low from the day before, right? Then it taps into extreme supply. This is the right place to enter. Pounds down, and then they exit the trade in line with this low from the day before. Nothing wrong with that. But what happens when the price action just completely and utterly leaves your supply and demand zones and keeps pounding down and pounding down? How do you capture this profit here? Well, let me show you with a simple profit-taking strategy. There's a simple version of this and a more advanced version of this that we'll go into later in the video, so stick around. So here we have some recent price action from the 11th of February. We've taken the high and the low and we've divided it perfectly into our supply and demand hierarchy. So how do we do that? So this Gann tool, I've just modified it to divide perfectly into 5 mathematically. So here are the settings for that. And then what I've just done also is drawn on more zones, again staying in line with that perfect math, and drawn down further so we have zones for a possible continuation. So we're waiting for a retest of this area in the New York session when we trade. So here we go, tagged in straight away. So we're in our trade here, right? We are waiting for a candle close at the midpoint of this zone here. And you can see that we've had a candle close in the momentum we want, red candle. So now what we do, we're going to bring our stop loss halfway into that zone now. This is a hard stop loss. If price action does hit it, we are out of the trade. So we've now reduced our risk by 50%. Great. Let's keep going. Okay, we just had that happen again and the price kept on booming down. So we've just had it close over halfway on this particular candle just here. You see this one here. Great. So now stop loss has come down again and that is into profit. So we're now in a profitable trade for sure, right? It will take us out in profit if it takes us out now. Great. That's where we want to be. Next candle. Okay. So this candle here clearly breaks the midpoint and we bring our stop loss down again to this midpoint. And now you see we've just tapped into our demand zone, right? And a lot of people will be aiming for the bottom of this demand zone to exit their trade. But we don't do that. We take our trades far further by not doing that over our testing. Okay, again, a good close over the halfway, just pretty much bang on. But there we go, into more profit now. And you'll keep seeing how this plays out. Again, not quite, but this one, yep, does close over the midway point. So again, we'll move our stop loss down over here. Fantastic, right? More profit, more profit, more profit. Let's keep going, see what happens. Not yet. Not yet. Okay, there we go, yet again. See, everyone would have been exiting here, right? Normal. Nope, we're taking more profits out of the market than that. Let's keep going. Okay, yet again, we've had another zone broken and we've closed over the midway point here. Fantastic. Let's keep going, see what happens. Oh, there we go. We are out of this trade now. So what would have been normally what the majority of people would do, you never want to do that, right? Never do what the majority do. The majority of people would have exited here for a 3.92. We just exited for a 5.41. Massive increase. You see the power of this supply and demand hierarchy and using maths in your trading, but you're not actually having to do any maths. Now, let's get into this advanced version. And at the very end of the video, I'm going to show you an intraday version of this, of a recent trade when everything crashed on the, I believe, 29th of January, how much profit you can take out of the market when things like that happen. So I'm just going to use this trade example that we just went over for the simplified version to show you the 2 confirmation types that we use in the advanced version. And not only that, we use something that we call a ghost stop loss, but it's a stop loss that is a reference point. So it's not a hard stop loss. So it doesn't get taken out if it gets wicked on. We wait for a full body close against the momentum we're trading. So we wait for a green candle to close against us, like in this example for a short, and a red candle to close against us if we are in a long, right? And we continue to move down to the midway point like we did in the previous version. But I'll show you the two different types of confirmation from this bit of chart action. And then we get into a monstrous intraday example that happened recently. So this candle here closed into this zone. This is what we call a type 2 confirmation. You see where it's closed into the next zone? We count that as a close within this zone, right? And so our stop loss would come down to the midpoint of this zone. So stop loss is now here. But remember, this stop loss is a reference point, not a hard stop loss. So let's keep letting the price action play out candle by candle. Okay, now this candle here, this big candle here. So we were waiting for a close within this zone, right? So we could move our stop loss down to the midpoint of this zone. And this candle here, where the body is still within this zone, not closed over into this zone, but the top of the candle is not touching the top of the zone when it's going short. The reverse is true for when you go long. We now move our stop loss down because of that too. So this candle is a type 1 confirmation, and the other candle up here is a type 2 confirmation. So now that you understand that, hopefully you do, we'll move on to this crazy intraday example. So this is our more advanced way of taking profits in the market. And this is also an intraday example. Okay, so we have taken the London session here and drawn our supply and demand hierarchy from the high and the low of the London session, and then trading it in the New York. And this is a very large recent trade we got in the market when it crashed on the 29th of January. But I just want to show you the power of this, and a slightly different example from doing it day to day. You can also do this session to session. But whatever you do, anything you want to implement into your strategy, you test it first. We are going to be looking for a short down here that we took. Okay, so we're just going to speed up the price action a bit in a short here, right, as it broke down there. Okay, so we've just had couple of massive candles, and you know what, I'm just going to bring that back a touch just to show you this quickly. Okay, you can see where this candle closed into this zone below just here, right? Now that for us would count as a close within this zone, so stop loss comes down to the midpoint in this zone. So let's move it down. There we are. Okay, now we are in profit most likely in this trade. Next candle, obviously this absolutely shoots down, and these zones are a lot smaller than if you do it day by day in the intraday, right? Different style of trading. Had a candle close all the way down into this zone just here. So what we count that as is a close within this zone. So we move our stop loss to the midpoint of this zone. I'll do that now. Stop loss there. Remember, it's just a reference point for the moment. Okay, another extremely aggressive candle going on. We didn't know what was happening when this was going on because the market obviously went wild, but we capitalized. That's the important thing, right? So yet again, this is busted down to this zone here. We count it as a close within this zone here. So stop loss comes down to this zone here. Let's go. There we are. Let's keep seeing how this plays out. And you see now where this reference point does really help, right? We've just had a candle wick up into the stop loss, but not close over it. So we're currently still in this trade. Okay, straight back down. Great. No change though. Now you see you would have exited the trade just here, and this candle was absolutely busted down the chart. Again, the candle has closed within this zone. We count that as a close within this zone, and we move the stop loss down to this zone. Bring that down to here. Keep playing it out. Another massive close down here. That's closed in this zone. We count that as a close within this zone. So we bring our stop loss down to this zone. Next candle, no change. And then we've had another massive close down into this zone. So we count that as a close within this zone. We bring our stop loss down to this zone. Stop loss down to here. Let's keep going. And there we go. That is our exit. So you see where this candle did bust up and close over just here. That is our exit point of this trade. And I'll show you how monstrous this trade is, because it is obscene. Not normal behavior. A 10.8 full profit as well. We didn't take profits along the way. So whatever you risked, if you just risked 1% of your account, and that's 1K, for example, you just made $10,890. That's insane. Now, I hope you see the power of these profit-taking procedures that we have within our strategies. But you may need a better explanation on how we draw the supply and demand hierarchy. If you're a bit stuck with that, watch this video here. And if you are a struggling trader, which I imagine you're watching trading videos on YouTube, so you probably are, then there's plenty of tools and resources within the description below. And if you would like to, apply to work with me. I'll catch you in the next video.